And then on Wednesday, bonds were slightly weaker before the data started coming in, and they quickly moved into positive territory following labor cost number. Labor cost is one of the big components that the Fed will look at next week when they're deciding on monetary policy. Third quarter productivity numbers came in at plus 0.8% on an estimate of plus 0.6. Part of that is third quarter labor costs went up 2.4% on an estimate of 3.1 forecast. It was 3.5% previously. Compensation per hour rose 3.2% in the third quarter, up from 3.8% preliminary. Real compensation fell by 2.3% in the third quarter, down 1.7% from the preliminary number. This all sounds really bad for the economy, but we have to remember that things that are bad for the economy are going to improve inflation, which is going to help the bond market. This led to the MBS being up 22 basis points early in the morning. It actually improved by 10 basis points while I was writing my morning post, so that's how fast things were moving. But we also are having low liquidity this week, so smaller trades are moving the market more and more. There's several ways to approach today's rally in treasuries, which led over to the UMBS, but the simplest is to focus on the uncommonly strong reaction to the third quarter labor costs. This prompted a break below the 3.5 technical level, ending the day on the Treasury at 3.42%. At the end of the day, we were up 19 basis points on the 5.5 UMBS. This lands us, like I said, in the bottom third of that range. It's quite a wide range with a ceiling of 102.788 and the floor at the 100-day moving average at 100.973. We tested it a couple times today, but it held up. In the mortgage world, we also got news that Finance of America has entered in a definitive agreement to acquire the assets of American Advisors Group. So this is a merger between two of the largest reverse mortgage lenders out there. The transaction is subsequent to all the usual stuff and regulatory approval, which will probably be a little tighter following the collapse of reverse mortgage funding recently. We also got November prepayment speed report. So this is kind of some inside baseball. It showed that the aggregate Fannie Mae 30-year spreads declined 16% compared to October. Report makes for 10 down months out of the last 12, and an aggregate prepaid speeds are the slowest since February of 1995. This is all good for the bond market to help close up that spread between the treasuries and the MBS. In 2021, there were a record-breaking 1,033 IPOs, 59 of which were SPACs, which are blank check companies that are established for future mergers. Year to date, there have been just 173 IPOs, a decline of 83%, and just 76 have been through SPACs. So no matter how you slice it, investor enthusiasm for IPOs is MIA. That comes from our friends at econ70.com.